a few points after apologies for absence first. Tom.
Thank you, Chairman. We have apologies from Councillor Mrs Newton, Councillor Griggs, and apologies for lateness from Councillor Parkin.
Thank you very much. Before we go to item 2, a few housekeeping rules. Not expecting a fire alarm, but if there is one, go through those doors out into the front car park by the front road and wait there for further instructions. If you could please, when you speak, first of all indicate by putting your hand up, and when you do speak, turn your microphones on, keep them close to you like I am, rather than over there somewhere. There are people going to be online. I expect Councillor Mark Waddington to be online. We have a big agenda. Turn your mobiles to silent, please, so keep your comments. I don't wish to stifle debate, but on the other hand, we've got a big, thick agenda here, so let's get through it as fast as we can. And finally, let me introduce you to Matt Mott. Now, we are used to seeing Eunice here from West Yorkshire. Matt is now in that chair for this morning and perhaps for longer. We shall discuss that later. But welcome, Matt, and we'll look forward to your report eventually. Morning, Tom. That's okay. Right, item 2 then on the agenda, declaration of members' interests. Does anyone wish to? First of all, Steve Larter.
Thank you, Chairman. Declaring interest as an active and deferred member of the Pension Fund.
Thank you, Steve. Andy?
Thank you very much, Chairman. My usual as a contributing member to the Pension Fund, employee of LCC, and I should probably say I have a few AVCs with Prudential for the later item on the agenda. Thank you.
Okay. Rob?
Yes, Chairman, I've got 2 close family members who are part of the Pension Fund. Thank you.
Thank you. And Mark? Put your microphone on, Mark, please. Yeah.
I'm a receipt, Chairman, of a pension fund allowance.
Okay, thank you for that. Any others? No. Should you find there is one during the meeting that you should have declared, don't worry, you can declare it at that point. Okay. Thank you for that. Moving on to item 3, the minutes of the previous meeting. You'll note there's only 2 pages of that, so if I can just take you through for accuracy, on page 1, which is down at the bottom of the page, it will say page 7 if you're working on paper, and page 2, or page 8 if you like. Can I have a proposer first that they are a true record of our last meeting? Please, a proposer, Andy Ancliffe, seconded by Tom Smith. Thank you for that. Are there any matters arising that don't arise during the meeting? No. Thank you for that. So I will sign those minutes at the end of this meeting. Tom, you'll just... Sorry? Oh, of course we do, yes. I do apologise, yes. Can I have a show of hands that we agree with the minutes and they're approved? Thank you. All in favour? Any abstentions? Any against? That's approved. Thank you. Just throw that away, out the way. Right, moving on then. Item 4 on the agenda, Independence Advisors Report. Over to Peter Jones, our Independent Advisor. Peter.
Thank you, Chairman. I was going to talk primarily about the global economy and the rate of inflation around the world, but I will say a few things about Ukraine. I've no doubt you know as much about the war there as I do, so I won't trouble you much with that. The economic data that were published in February showed that the global economy was recovering pretty quickly from COVID and was growing strongly. The sort of figures we were talking about in the first quarter, well, in January and February, were forecasts for 2022 as high as 5% per annum for the calendar year. Obviously, some quicker and some slower. The principal reason for that was the recovery from the supply chain difficulties. but clearly the energy crisis and its effect on the rate of inflation has put all those figures into jeopardy. The latest inflation figures, which have been published in the last few days, have inflation in the UK and the US at close to 8%. In Europe, it's more like 6%, but given that central banks typically have a target of 2%, you'd have to say their performance was absolutely woeful. I was alarmed to see a forecast on Monday, I think it was, somebody suggesting, one of the major investment houses, that inflation in the UK and the US could touch 10% in the fourth quarter of this year, principally driven by yet another revision to the electricity prices. But obviously that is also a function of the oil price. So let's talk just briefly about how stock markets have reacted. The FTSE All World Index and its compatriot, the MSCI, the All World Index, is about 15% down from its peak in January. The broad-based US market is down a similar amount. The tech stocks, the Apples and the like, the Amazons, that's down more than 20%, or was as of earlier in the week. The UK market is, for once, the standout market. It's only down 10%. So very broadly based funds like Lincoln seem to be down about 6 or 7%. Obviously, that's because they're diversified and because their holdings of property and alternatives have not yet been reflected, or the valuations have not been reflected in the market turmoil. Joe, I don't know whether you've had a latest figure for the value of the Lincoln Fund, or have you only got the end of February?
No, the end of February is the most up-to-date that we've got at the moment from the custodian.
Moving on to talking about the central banks, they're clearly very alarmed about the rate of inflation, and rightly so. They're determined to raise short-term interest rates. The US went up to 0.5% yesterday. We in the UK are at 0.5% today and will probably go higher, 0.75% or 1% later today. But Europe is still on -0.5%, and they show no signs of moving very far. So I won't say we've got a two-speed global economy, but there's no doubt that the effect of the energy price rises is very substantial in Europe, for the obvious reason that Germany and Eastern Europe is so dependent. And the US is not particularly dependent because it's almost self-sufficient. What I thought I'd update you on was forecasts for interest rates later on in the year. I did say they might get to 2% at the end of the year before the war. I think the central banks are going to be cautious. They do not want to knock the economies down into recession. Interestingly, Mr. Powell, the chairman of the Fed, actually said yesterday he thought it was unlikely that the US economy would go into recession. And the market, as you may have seen, bounced quite substantially on that view. But equities certainly were in a very steep downward trend until about a week ago. Clearly, if the NATO conflict gets worse, i.e. threats of nuclear arms in use, then the drop could still be very substantial. But otherwise, maybe equities are stabilising. The performance the last 2 or 3 days has been really quite positive. And Chairman, if I may go on a little bit longer, I just thought I'd talk about a possible end game in the Ukraine, which really centres around half a dozen points. The first one is, I think it's pretty clear, and certainly all the military commentators are saying, that Russia cannot control a country the size of the Ukraine without at least 500,000 troops on the ground, and pretty committed troops at that, which it appears not to have. So now whether Mr. Putin agrees with that analysis remains to be seen. On the Ukraine side, they're certainly being asked to recognise the de facto annexation of Donbass and the other region to the north of it, whose name escapes me. I suspect Russia is going to demand a land corridor from the old Russia along the north of the to the Crimea, along the north of the Black Sea to the Crimea. Now, Ukraine won't want to concede that, but if you look at their incursions into the Ukraine, the Russians have taken a lot of land down there. Russia wants neutrality for Ukraine. Well, NATO's made it pretty clear that it is not going to admit Ukraine into NATO. So, and I think Zelensky has more or less admitted that he's going to have to concede that point. The more controversial point is whether neutrality means disarmament. And just to remind you, they're not the same thing, because both Finland and Sweden have large standing armies, but they claim to be neutral. Okay, I'll stop there, Chairman.
Peter's doing it now, yeah. Certainly the negotiations are looking a little bit more hopeful, but who knows? Let's hope that it doesn't evolve into something worse than that. But certainly from an investment point of view, we're going to hear more about anything that we're linked in with Russia later on in the report. But thank you for that, Peter. Are there any questions for Peter on the investment report, please? No? Thank you very much. Yes, certainly, Tom. Sorry I didn't see you.
It's all right, thank you, I'll be brief. Peter, do you think that the central banks are now in a process of admitting the interest or the inflation rise isn't transitory, because there's for a long time been this talk of, oh, it's a transitory feature? Well, and I appreciate I'm a layman, but it certainly doesn't look transitory to the average man in the street. It looks like quite a long-standing thing that's going to be here, certainly for a couple of years, especially with events outside of our control. Looks like it's going to be here for at least a couple of years till it calms back down. Do you think the Bank of England will also raise interest rates, or do you think, much like the Fed, they're very wary because they don't want to put the economy into a tailspin?
Well, the central bank certainly did think it was transitory. I still hope it will be, but it's dependent on energy prices. But there are some straws in the wind. One of the biggest increases, one of the biggest contributors to the inflation rate has been used car prices. And they have actually started to turn over. They were up more than 20% per annum. Touch wood, we will fall back. The issue is whether we fall to 5 or 3 or 2. And I think the higher of the figures might be more appropriate.
Mark?
Peter, your report doesn't mention China. And I just wondered whether it's possible to do a report without mentioning China.
I'm not sure it is, Mark, to be honest, because it is such an important part of world trade. And the Chinese economy is dependent still on getting its population into the middle classes so that there's no, dissension from the current leadership. So I don't think they are going to help Russia that much, and I think they will want to stay on a fairly even keel with the United States. But time will tell.
Sorry, Chairman, I was thinking more about the economic situation in China rather than whether they're going to support Putin or not.
Oh, sorry. Yes. Obviously, COVID has had a very serious effect in China. The current estimates are they forecast 5.5% per annum economic growth. That's not remotely feasible this year. And the second quarter is likely to be 0.
Okay. Thank you, Peter. Any others? No. Thank you again, Peter, for your report. Apologies for interrupting that report, but we've got an awful lot to get through today, so ask you all to try and keep it as brief as possible. Welcome, Councillor Sarah Parkin. We knew you were joining us late, so thank you for attending. Yeah. Don't forget to switch your microphone on when you're speaking, so yeah, because you weren't. I'm guilty as well. Thank you for that. Right, we're asked in the recommendations to note the report from the independent advisor, so can I have a show of hands that we note that? Thank you, that's passed. Moving on then to the item 5, which is a report by the independent chairman of the Lincolnshire Local Pension Board. Over to you, Roger.
Right, thank you, Chairman. I'll be fairly brief. So this is our normal quarterly report. 5 items really just to touch upon. First of all, data quality. You'll see in paragraph 1.2 that scheme specific is still 84%, 85%. Target is 100%. It's fair to say that the pension board is getting concerned about this, and it's a bit unfortunate that, that Matt's here for the first meeting, but we have been promised significant improvements over the last 18 months, and that's not materialised. We did have a conversation about whether or not additional staffing was required, so kind of just focusing on that area. But it's fair to say that Eunice was keen to get an IT solution. So we will continue to monitor the situation. The second one was working with employers. We had an excellent presentation, Chairman, by the Employer Relations Manager at West Yorkshire Pension Fund, and if you've got spare time on the agenda sometime, it's well worth having 20 minutes with that lady. Very good. Update on external audit, and I suppose it's really just to bring you up to speed with the national initiatives, because there is a paucity really of external audit resources, and there are 1 or 2 initiatives underway, and there are a couple of things just hot off the press actually, Chairman, which I received yesterday. So there's a new consultation underway from the Financial Reporting Council on some proposals to make the accreditation of audit partners as key audit partners under the Local Audit and Accountability Act easier. And by so doing, they want to increase the pool of audit partners available. I have to say, okay, that's fine, but it's people underneath that they need as well. However, there's an initiative there. And then secondly, there's a tender process which is now live, run by the public sector audit appointments for the 5-year cycle from 23-24 to 27-28 for over 450 opted-in local audit bodies. So that's underway. Now, I don't know whether Andrew's got anything else to add from the SCT side.
If that's okay, Chair. Yeah, I think just a couple of things to supplement Mr. Buttery's update. I think 99% of those bodies have opted into that, as this council did as well. So I think very clear signal from the local government sector that opt-in process is still the right one, and it's very much a sufficiency argument, as Roger said. There's been changes around, formal changes in the sign-off deadline, so to try and give that a bit more time to get audits over the line from next year. But yeah, very much, the message from government is to work, play nice with the audit sector, and we'll work our way through it as part of the next set of changes. So yeah, that's the main update. Thank you.
Thank you, Andrew. Roger?
Yeah, just finishing off, Chairman. I mean, there's a report on Prudential, which was kind of historic now, and you've got further reports on Prudential, so I won't comment on that. Annual benefit statements, still a source of concern. I mean, brilliant performance by West Yorkshire in getting 99.9% produced electronically, but we're still after information from West Yorkshire on actually how many have gone online and looked at them. And again, we've been promised some information on that, but I have to say we're still waiting for it. So in terms of assurances, data scores, we're worried about the actual people looking at benefit statements is another source of concern. That's it, Chairman.
Thank you,
If there are any
Roger.
questions,
Maybe
more than
Matt,
happy to.
You might like to answer that later on if you can, but leave it until your report, okay? Thank you. Yes, Mark.
Thank you, Chairman. I think this committee has raised similar issues to the ones that you raised, Roger, in relation to the data coming out of West Yorkshire Pension Fund. West Yorkshire, our administrator at West Yorkshire. We did quiz them about resources and what they were doing to actually gain resources to actually deal with the issue. And I think I did say at the time that a sort of light concern, and that sat in my mind, was are they too busy growing the business as opposed to dealing with the with the people they're contracted to provide the service? But I think it shouldn't be possible to do both. Did they give you, or can we get a response at the right time on this agenda in terms of, what sort of measures they're putting into effect and what sort of deadlines they've got to do it? I'm quite happy to wait until the right time on the agenda, though, to get the answer.
Well, by all means, wait until Matt's on. But in addition to that, Matt will be interrogated. I'll use the word correctly this afternoon.
Yeah, we have ways. Right, you happy with that, Mark? Yeah. Okay, thanks. We'll move on then. Any other questions for Roger? None seen. We're asked to note the report. Can I have a show of hands, please, that we note that? Thank you. That's passed. Moving on then. Thank you again, Roger. Item 6 is the pension fund update report. Over to you, Joe.
Thank you, Chairman. So this is the standard quarterly paper, and I'll briefly run through the key points in each section for you. So section 1 on page 17 sets out the funding level change and performance over the period. More information on the underlying manager's performance is included in the investment performance report at item 15. Paragraph 1.2 sets out the asset allocation with property and cash under and over their tolerance levels, which has been an ongoing thing for a while now, but that's explained in paragraph 1.3. Performance over the quarter has been slightly above benchmark, but still good over the 12 months, outperforming by 0.03% and 2.1% respectively. And the funding level has remained fairly flat since the last quarter, fully funded at 100.7%. So that's a surplus of 33 million, and the details of that are shown at paragraph 1.9. Section 2 on page 21 and the appendix on page 29 show how the fund meets the requirements of the pensions regulator. I'm still waiting confirmation from one member of the committee now, so an update from what's written in the report as to when we'll get that final TPR training completed so that we can move that indicator back to green. Section 3 on page 22 updates the committee on any breaches, so that shows the late payment of contributions, which is covered in the report at item 9 on the agenda. and following the concerns that the committee have had with Prudential, we have a review of the AVC provider, which was undertaken, and I'll be covering that at a later agenda item. Section 4 on page 22, updates for any changes to the risk register. There were none to report over the quarter. The council has been looking at how it does its risk registers. There's been a lot of work being done on that, and we're doing some work. So the July meeting, where we bring our annual review, you'll see a slightly different risk register to that. So we'll be updating that for the July review. And section 5 on page 22 provides an update on what's been happening with Border to Coast. We held a meeting with Border to Coast with all the partner funds on the 2nd of March on the impact of the Russian conflict on holdings that we have within the sub-funds that they manage. I have shared the Lincolnshire position to the committee in the weekly update email, and will continue to do that. But just as a reminder, we have holdings across 3 managers. So that's Border to Coast in the Multi-Asset Credit Fund, that's Legal & General in their Future World Equity Fund, and Morgan Stanley within the Alternatives mandate. At the end of February, that was about 1.8 million in value, so 0.06% of our £3 billion fund. As at this point, those values will be pretty much written down to zero. What we are doing, though, is having regular discussions with all of those managers as to what we should do once markets reopen and we're actually able to do anything with those holdings. But I will, as I say, keep you updated in the weekly Monday morning emails. The last joint committee with Border to Coast was held on the 8th of March, and papers were shared with the committee. If you have any questions or comments on that, then please feed that back through Councillor Strengle to raise at the next joint committee meeting, which will be held in June. Section 6 at page 24 sets out the requirements under the MiFID II directive to be able to evidence that collectively the decision makers of the pension fund are eligible to be opted up to a professional investor status, and also sets out the impact of not meeting the required criteria there. So to enable us to evidence this to our investment managers, that we have to do so on a regular basis, we'll be sending out a knowledge and training needs questionnaire to all committee members in the coming weeks, so that we can make sure that we can retain that opted up status. And then the final comment that I wanted to make is just on training and conferences at section 7 on page 25. One that was had in January was the annual LGPS governance conference that was held in Bournemouth, and notes provided by Hymans Robertson on the subjects covered are attached at Appendix E. So I shall happily take any questions on the report. Thank you.
Thank you, Joe. Tom?
Thank you, Chairman. Do bear with me one moment. Thank you. Joe, what's being done to address the underweight position in terms of property within the pension fund? And secondly, I know it won't, how quickly can we address it? I know it's not something that will be done overnight, because if I've read the report correctly, there is the return from the funds from the Aviva UK Commercial Property Fund, which will make that position further underweight than it already is. Thank you.
Yes, thank you. Yeah, we have bought some additional units in the European Property Growth Fund to try and get that money coming back from Aviva reinvested. We're working with Border to Coast. The Global Property Fund should be available for us to invest in towards the end of the year. As you say, it's not a quick thing or a cheap thing to get in and out of property. So we don't want to reinvest our cash in funds that we think will not be transferring across the Border to Coast, because it's about a 7 to 8% round trip if we buy and sell units. So our understanding is that the I won't say Standard Life, but they're now Aberdeen, European Property Growth Fund will be within the global fund that Border to Coast are creating. So being able to put extra units into there is a positive thing. We're looking at, there are additional drawdowns that will be coming on the 2 residential funds that we've invested in, Hearthstone and Allianz. So it's something we're keeping a really close eye on. But as you say, it's quite, we don't want to put money in somewhere where we're going to lose a lot of money in taking it out in 9 months. So it's something we keep a close eye on, and are having discussions with the consultant as to how better we can build up that portfolio.
Tom?
Thank you very much for that. Reading through the report as well, Japanese equities are clearly an outlier as well. Do you know what you may not be able to answer what's caused that or what is suspected to have caused that, but I saw that and thought that was quite a surprise. Thank you.
Sorry, I'm unsure as to where that's referred to in the fund update. Oh, on the returns. Sorry, I'd have to take that away and look into that. We don't actually have any holdings in Japanese equities. Oh, yes, we do, not within the LGIM fund and Auditor Coast. But I'd have to have a look into that. We don't have what I meant was we don't have a direct regional Japanese portfolio, so it'll be within the overall equity exposure. But off the top of my head, whether Peter has anything to add, knowing the difference in performance, no. So we can take that away and get back to you. Thank you.
Thank you, Joe. Any other questions for Joe? I've got one, Joe. Is it fair to say that under item 5.1 or section 5.1, you know, when you mentioned the small proportion of funds we have that are perhaps linked to Russia, that it's not as simple as, although the emotional thing is let's get out of it, let's divest from it, it's not as simple as that. There's a lot more to it. Could you explain?
Yeah, I mean, it is a difficult one because we have to have our fiduciary duty hat on, and there is obviously a big, it's kind of heart and head really. The issue is at the moment we can't sell out of most of those things and values have pretty much gone to zero. The questions and the discussions that we've had, particularly with Auditor Coast, who provided a really useful update, which I shared, was about actually if you are selling or if you could sell, who would be buying? So would you actually just be selling it to Russians who, when things return to normal, will benefit from these near zero prices going back to normality? So we don't have a lot of exposure, unlike some funds where they've got allocations to emerging market equities. It is absolutely minimal. So it's remembering our fiduciary duty as investors, but also looking at any sanctions that are put in place and trying to take, I suppose, the temperature of the overall market as and when those markets come back into play and our managers are able to trade. Also, some of the within some of the equity markets, for example, Russia's been removed from the index. So within the FTSE, within the LGIM Future World Fund, that would be sold as soon as it could because it's no longer in the index anyway. So it's taking account of all the information that we have rather than trying to make a decision led by the heart, which is obviously what we need to do as a pension fund.
Thank you, Joe. Any other comments, questions? Right, in the recommendations, we're asked to note the report. Could I have a show of hands, please, that the report is noted? Thank you very much. That's passed. Thanks again, Joe. Moving on to item 7 then. Excuse me. Responsible Investment Update Report. Over to you, Claire.
Thank you, Chairman. The report brings to the committee details of the fund's responsible investment activity during the third quarter of 21-22. The report details activity which has been undertaken by the fund and organisations that the fund is a member of and uses to undertake RI activity on its behalf. Section 2 of the report sets out details of the work of the local authority pension fund forum, and paragraph 2.2 details the work that they've undertaken during the quarter. And this includes company, collaborative and policy engagements on behalf of its members. Further information on their activity can be found in their quarterly engagement report, and there's a link contained in the paper to that. Section 3 covers the work of Auditor Coast. Each quarter they publish RI activity that they've undertaken as a report on their website. A link to this is included in the paper, and some of the highlights from that are set out at paragraph 3.2 and include the publication of their 2022 Responsible Investment Policy and Corporate Governance and Voting Guidelines, and the committee saw our aligned policies to these at the meeting in December. It also includes high-level information on voting activity across all of their sub-funds. In addition to the work undertaken directly by Auditor Coast, they've appointed Robeco to provide voting and engagement services, and details of their activity can be found in Section 4. Section 5 highlights the responsible investment activities undertaken by Legal and General Investment Management, and this is a new addition to the report for this quarter. The fund invests 15% of the total portfolio in the LGIM Future World Fund, and they publish a quarterly ESG impact report, and there's a link to this in the paper, and it provides details on their voting and engagement activities during the quarter. Section 6 covers voting activity for the 2 border to coast equity funds that we're invested in, and Appendix A and B provide more details on that activity, including the number of votes cast, meetings attended, and where votes were cast against management. Section 7 provides the committee with information on work which is currently ongoing with officers and border to coast to develop net zero reporting metrics. The fund will be required to measure and report on net zero progress through initiatives such as the Task Force on Climate-related Financial Disclosure. The aim of this work is to identify a single set of industry standard metrics which can be measured and compared consistently over time and across the portfolio. The report includes details of the key principles in selecting metrics and key areas which they will cover. Finally, in September, the committee submitted its stewardship report for 2021 to the Financial Reporting Council, and a copy of this is attached to the report at Appendix C. You'll be pleased to hear that the fund has recently heard back from the FRC and that our application for 2021 was successful, and Lincolnshire Pension Fund will be added to the list of signatories published on their website. The FRC has provided feedback to officers which will be reviewed and considered when preparing future years' submissions. The FRC expect to see continuous improvement through annual stewardship code submissions, so the fund will need to keep developing in this area to remain signatories in future years. And I'm very happy to take any questions from the committee.
Thank you, Claire. Any questions for Claire? Comments? You'll note in the recommendations, excuse me, that it not only asks us to note the recommendation, or note the report, I should say, by Claire, but also to discuss the responsible investment activity that have been undertaken during the quarter. Does anyone wish to comment on that? Yes, Mark?
Just as a way of trying to satisfy that latter point about discussing the issues, I don't have any problems with the paper itself in terms of what it is that's sits behind the measurement, should we say. It's a question of, I think the issue then becomes is how those may be used in decision making, but that will come out in the wash, I guess.
Claire, do you wish to answer that?
Yeah, and I think the paper, I suppose, on the face of it, is there to provide the committee with information on the activity which is being undertaken on your behalves, so to give a greater understanding of the things that are being done. But then when it comes to discussions about responsible beliefs and maybe looking at the work that Border to Coast are doing when they're building new sub-funds for us to invest in, it's kind of giving it a framework for that, and helping with some of those thoughts and decisions.
No, I understand that. You know, and I say it's the latter point, I think, that becomes more interesting to a certain extent, particularly when government is taking pragmatic views of what net zero actually means, and perhaps completely different, or significantly different to what the view was, you know, in Glasgow, whatever it was 8 months ago.
Yeah, and I think you can see even in the report, which has been a new addition to the to this agenda in the last sort of 12 to 18 months, it's developed over that time. Very much the work that we're doing looking at net zero is about putting in place a foundation based on what is available today, what can be done with managers and reporting agents as it stands, but trying to get something that's future-proofed so that we can continue doing this. And it's going to be incremental steps in a journey to where we are today, to where we are in 5 years, 10 years, and by 2050, which is the target which Border to Coast have set at the moment for their portfolios to be net zero. But it's trying as much as possible to put in place appropriate building blocks so that we can do the things that we need to do, not just today, but all the way along that journey.
I'm sorry, I do understand what you're saying, and it's fine, you know, and it is, you know, what the building blocks are used for then, you know, use your words, in 3 or 4 years or 5 years' time. And that is decisions that may not be the ones that we think they may be now.
Thank you. Andy?
Thank you, Chairman. I was just going to comment that I thought the report was really excellent, and I think it's so heartening to think that when I first sat on this committee, if you saw a vote against management, you probably thought it was a mistake in the paper. and to see how far we have come with the ESG and the responsible investment and the carbon management. Take Mark Councillor Allen's point about the difficulties and we're possibly not there yet, but yes, I was heartened by the detail and the content. Thank you.
Thank you, Andy. Yeah, obviously net zero is a movable feast, I think, at the moment, quite honestly. There'll be a lot more to come. But thank you for that. No other comments? And we've been asked to note the report, so all those in favour, please show. Thank you. That is passed. Moving on then to item 8, which is the Pension Administration Report. As I said before, we've welcomed Matt Mott. I'm not sure, Matt, whether you're still the Assistant Director of Finance, Administration and Governance for West Yorkshire Pension Fund. Is that still your title?
No, Chairman, it's not my title. I'm not sure what it is. It's Governance and New Development Manager, I think, currently.
Okay. Well, it's over to you now for your report. Thank you, Matt.
Thank you, Chairman, and good morning, everybody. This is the Pension Administration Report. I should try to pick out the main points and address those issues that have already been mentioned this morning. If you have any questions through the report or afterwards, please let me know, and I'm sure you will. The first thing I want to draw your attention to is point 1, performance and benchmarking. Generally, I think it's very good. There are a couple of points, though, that aren't so good. Namely, we haven't hit the KPI on 3 areas. Deferred benefits into funds, which is transfers from an LGPS fund to another LGPS fund, and estimates. There are some very good reasons for these. You can see for the deferred benefits that we actually have moved staff around to deal with more priority work. Can I just let it be known to the committee that we are still meeting our statutory requirements. The requirements of the scheme regulations is that we communicate with scheme members within 2 months of the date of leaving or receiving the information, not of actually providing them with the benefit values, and it's the benefit values that we are failing on at the moment. The interfunds, there is an extremely large volume of interfunds still, and they may not be green, if you like, for the next quarter. But the good news is that the pension estimates, although it was a very busy time, particularly over the Christmas period with holiday, they should be picked up and be green for the coming or the next period. The other things to look at, I've looked at the appeals, the internal disputes resolution procedures, and I was very pleased to see that there's been some movement on these, and I've probably got some updates that aren't in the report. So in the stage 1, the first appeal was turned down, so that's good. Nothing else to add to that. The second appeal, they were refused an ill health pension initially, but that has now been revisited and the pension is in payment. That was awarded in November. I know this was mentioned, I think it was in the pension board at the last pension board, about this ill health appeal, but the scheme member, the employee, was still in work. Well, if you're still in work, then you haven't been dismissed on the grounds of ill health. So we've reviewed that, we've looked at that, and they are indeed still in work, and the appeal has been withdrawn. We've looked at, the next one is an appeal being refused on ill health. That had a second medical. I understand that second medical didn't meet the criteria, and since this period of reporting, it has gone through a stage 1 IDRP and is now at stage 2. Moving to the stage 2 appeals, the first one there, that was not upheld. It says here a decision letter was drafted. Well, that decision was it was not upheld. And the next one, this is still ongoing, unfortunately. We have been in contact with the employer and we haven't had the required information. I understand that Lincolnshire have also been in contact with the employer, as has the scheme member, and West Yorkshire have been in contact with the scheme member. So in terms of relationships, I think we're fine, but in terms of getting this resolved, we are not, and that is work in progress. And the last one on these appeals, the Ombudsman, the criteria was not met of that second medical. Moving on to point 5, the prudential. I know this has been some issue over the last 18 months, 2 years, and indeed there are reports later on today. As far as we're concerned on the administration, we seem to have ridden out the majority of the storm. There's 360 retirements in this period. Only 8 had AVCs. They were all disinvested in time and they were all paid correctly. And as far as I'm aware, current contributions have been received on time and invested on time by Prudential. Now, that doesn't mean to say that we're out of the woods and we're not monitoring, but this is a good news story, I think, from compared to where we were months ago. Staffing, I think that was one of the first things, or one of the things to mention from earlier, is an ongoing concern, I suppose it's the way to put it. Looking at this report, there are 20 vacancies across the organisation, from our administrators to senior managers. There is a recruitment process in place. The resource has been checked to see that where we need it. And I suppose the key is to recruit experienced staff, so that once they hit the floor running. There isn't too much training that's required, certainly internal training for West Yorkshire, internal training about our partners, but they know the scheme. And whether it's good or bad evidence, I may be evidence of that. I've been working in pensions since 1992, and I've actually been employed in the LGPS since 2001. I joined West Yorkshire the 15th of November. So I can guarantee we are recruiting to these posts. That obviously has had an effect on the KPIs. Clearly, if we don't have enough staff or experienced staff, then we are going to be slower at turning some of the work round. Looking at 5.4 and looking at the audits, everything in audit has been good or excellent, which I'm pleased to report. The one comment that I picked out in the report was about a pledge, the transfer pledge. This is something new that's been introduced by the pensions regulator, and they've suggested that we actually sign up to this pledge. And basically what it says is that not only are we meeting our statutory obligation to these transfers, that we're already adhering to the correct and proper due diligence processes, and also that we're implementing the new regulations which became effective in November, and I'll come to that in a moment. So we are looking at that. We can't think of a reason not to do it, but we're reviewing what the requirements are, and then there will be further discussions with our partners, because if we as your administrator sign up to this pledge, it just seems appropriate and consistent that the administering authority signs up too. Looking at web registrations, I know this probably is good in terms of it is upward. In terms of the information that's required for annual benefit statements, I agree. I don't know what I should or shouldn't say, because I don't know what I know. What I know is I feel, and I could be quite passionate about these things, is that if you've got an online tool and it saves time and it saves money and it gives access to scheme members, then I think it should be promoted. So I think all I can say here in this committee is I'll take this back to West Yorkshire and find out if we can access that information. Because I think we need to know when people access their information online, why, and how many people. In fact, how often and how many people. But I think it's critical to going forward on a modern pension fund is that people can look at their details online. Okay, so nothing really to add on detail, but I hope that just assures you that I've already made a note and I shall take that back to the fund. Just a note on budget. Budget is less, which is a good news story. It's marginally less. As far as I'm aware, the reason for this is we have less staff to pay, so our staffing costs have been down. Also, I understand that the IT has been less. Now, whether that's because we need less IT for less people, or the developments that we require for the new scheme regulation, or even the development for removal of age discrimination, has not come back through the system. I'm not saying there aren't any costs, but currently as we sit here, the impact is that your estimated costs were too high, your actual costs are lower. So that was a report on the administration. I wasn't going to talk about the survey results unless someone's passionate enough to ask me a question. Good. Let's have a look. Right, technical issues that we experience as administrators. The cost control mechanism, which I suspect that you understand better than I do. I'm a die-in-the-wall administrator. But I think it's broadly good news. We now know that there are 3 proposals that are going to be employed at the same time, and it's given us some consideration as a stakeholder to how we do it. It's reaffirmed what our expectations are, so I think it's good. I think the downside is that thing, and I've mentioned it already, age discrimination, McLeod, and will those costs be considered and have an impact on the cost mechanism? But I think we don't know. So I think that's the downside of the concern for that. Draft regulations of the pension dashboard. Well, as I understand, there are some draft regulations in circulation at the moment, and I believe that the LGA, Local Government Association, has responded to a consultation. It closed on the 13th of March. I think there are some significant questions around the dashboards. And just to recap, the dashboard is the government's aim for all pension scheme members, private or public sector, to access their pension details online, a one-stop portal. Now, what concerns us, I suppose, about this is the implementation date or staging date has been suggested to be April 24. The issue with that is that the McLeod regulations may not come into force until October 23. And as your administrator, if we are working on recalculations, repayment of benefits, adjustments to annual benefit statements, will we have the time or indeed the resource? Will there be the cost? Will there be the payment in the budget? Will the money in the budget to be able to deliver in time? It certainly puts everybody under pressure, whether it's the administrator or the administering authority. I think we need to wait and see what LGA say. So I think it's good we've got the regulations. I just don't think it's quite so good the timing. Excuse me while I flick through. Got fingers and thumbs this morning. A bit nervous. It's just the first committee. Right, pension scams and new restrictions on transfers. I've already mentioned the pledge, where we sign up to say we pay or will transfer the statutory benefits. It is the scheme member's statutory right. We also say that we will say that we are diligent and we complete all our checks on the advisors, the introducers, and the schemes. But for the first time ever in our scheme regulations, this slight amendment to the legislation has actually given a bit of power to the transferring authority or scheme, because for the first time ever, we can actually legitimately refuse to transfer a pension if there are concerns about its destination. Now, there could be all sorts of reasons for it. Someone hasn't received advice. It could be overseas. It could have high charges. The investments might be from obscure places around the world. It might not be a registered scheme. There's no link between someone's employment and an employer's scheme. All these reasons we could legitimately say no and protect that person's money from either, not even just a scam, but just from a poor investment choice. Now, we have to be very good at that, and we have to be diligent and complete our checks and be thorough, hence the pledge. And it has meant that the West Yorkshire have thoroughly reviewed their pensions transfers. We've got new communications, including the no, you can't transfer it letter, which is quite heavily loaded with IDRP information, because you can imagine that lots of scheme members will be upset that they can't move their money out. So we've looked at that. It is brand new. It only came in November. We have already refused one or two transfers, but as yet there has been no complaints. And I think that is the end of my report. What didn't I pick up? Staffing, hopefully I've answered that. The annual benefit statements, I think I've answered that. The common data, I think 84% is challenging for everybody, because we need to clearly lift that. I mean, 100% is the ambition, as you say, is the regulator's requirement. What I don't know, because I don't have any history here, is where it's come from. So my first question back to West Yorkshire Pension Fund will be, is that value, is that figure going up? If it is, then we want to know why it's going up slowly and it's not already at 85 or 90 or 95. So I need to find that out. But also we need to find out how we think this may be affected when we look at the data requirements for McLeod and the data requirements for a dashboard. That in itself, those two pieces of work, might actually drag these figures up quite naturally. And they're the questions that I'll be asking when I go back to the pension fund. That is the end. Any questions for me, please?
Mark?
Yeah.
Thank you, Chairman. I listened very carefully to your comments about the staffing issues, what I didn't. I think whilst it's recognised, and that's part of the issue, is recognising that there is an issue. I didn't gain a great deal of comfort about how you're actually going about addressing it. If it is 19 staff that you're short, it's a fairly significant number. So I'm afraid, don't be surprised if we keep on raising this issue, when you attend the committee meetings, because it has been raised at least once before, if not twice before, at the committee. And what causes, and we had a very similar conversation, Chairman, at the Health Scrutiny Committee yesterday about recruitment. When there is gaps in organisations, the gaps tend to be across a number of organisations as well. And what frequently happens then is people just move around from one organisation to another, and there's a temporary reprieve, shall we say, in one organisation, which is represented by a growing problem in another one. I would like some comments perhaps next time about what practical measures are you putting in place, either across the industry, in terms of getting the right sort of people, or in particularly within the West Yorkshire organisation to actually address these numbers. And sitting behind that is this concern I have that if you do grow the business, the problems that you've got may become more and more severe. So yeah. I'm not really asking an answer next time round, maybe.
Well, I just could add a comment if you'd like. This is that you definitely mentioned it at the last committee because I was online. I certainly can go and find those answers, or at least I can ask the question and see what answers I get, because I don't have the history. All I can do is reiterate, as I do, there is a recruitment process. So we'll see where we are. With regards to actual staff, when you mentioned it moving around, there are recruitment all over the country for LGPS staff. They are at a premium, believe it or not, and that may have slowed down the process. But I will go back, I would take your comments back and see if I can have a bit more of a articulate response next time.
I think Joe wants to come in and perhaps help.
Yeah, thanks. I mean, this is obviously something that we've been discussing with West Yorkshire for quite a while, and just obviously because I have the history, I thought it might be helpful just to add. Some of the increase in number of vacancies is because they have had a restructure. They've got a lot of new positions in there, and a lot of that is for future-proofing to improve the governance structure. So Matt's position is a new one. There's new positions coming in to help with the McLeod work that will be coming up, looking at the future dashboard work. So it's not that they've lost 20 people that they're looking to replace. A lot of this is to do with new positions and new staff they're getting on to try and address those future workloads. I was going to mention about not a day goes by really that we don't see emails coming in with people looking for LGPS pension staff. So I think actually one of the benefits of the shared service is that we aren't trying to do this standalone. And the other thing that I would just mention is that we have also had that discussion that they should not be looking for any new business until they're fully resourced for the business that they have now. Thank you.
Yep. You're not on, mate.
I am on now. I wasn't suggesting that they are losing numbers. What I was saying was there's pressure in the industry, I think, and that's a combination of other people being in a similar position, as well as the growing demands that are placed on the industry as a whole from central government in terms of reporting and all that sort of thing. It just all adds together in terms of the difficulties of getting new people, not necessarily losing the people that you've got. Hopefully your organisation is one where people want to stay rather than leaving. But I am very pleased about the comment that you made about no further business until they've got their act together.
Thank you. Tom?
Thank you, Chairman. Am I on? Yes, I am. If schemes make change to the normal minimum pension age, is there not a similar risk to that of the McLeod Sargent judgment, and have such risks or possible risks been assessed, or are they due to be assessed so that scheme managers can be appropriately advised?
That It's a very good question. The answer is we don't know yet, and I think we're going to have to do all of that. And I think the problem is that obviously with this new age, minimum age of 57, and with the suggestion that if you've been in the scheme prior to, if I get this right, November 21, you have the right to retain an early retirement age of 55, means that yes, we need to, first of all, liaise with our authority bodies like DLAC and LGA and find out what they really think, see if that can be implemented across the board in scheme regulations, or as I think it's been suggested as in this report, it's at authority level, which would then become a discretion. And then you're right, in so much as if that's not delivered fairly, it would be another discrimination within the scheme. We just don't know enough about it to say a full comment, but I think your concerns are well aired, and I think that's going to be the next hot topic post-McLeod.
Okay. Steve, sorry.
Thank you, Chairman. Paragraph 8, the shared service budget. Correct me if I'm wrong, but I think previously we had a more detailed table there, which is where we picked up the staffing underspend, which then drove the debate about the staffing vacancies. It doesn't seem to be there anymore, so could I request that that does come back, because it's difficult to scrutinise just a single figure when we don't know how that's made up.
Matt?
Yeah, no, I'll talk to Eunice. If that, I wasn't aware that there was a table in there before, so if there was, I'd find out why it's been taken out, and then we can look to reintroduce it. Not a problem.
One from me, Matt. I'm pleased to hear that steps have been taken regarding transfers out. But am I right to assume that we're only talking about transfers out into, for instance, DC schemes, group pension schemes, or are we talking about transfers out into other final salary or DB schemes?
Yeah, I think this sort of level of conversation, we're talking about every potential type of transfer, whether it's public sector, private sector defined benefit, DCs, and even overseas transfers as well.
Okay, thank you for that. That's great. Any other questions from members? Comments? No? Thank you again, Matt. And your inaugural test is now over.
Thank you very much. Thank you, everybody.
I think you've passed with flying colours. So thank you for that. So committee are asked to note the report. All those in favour, please show. Thank you. That's passed. Matt, it's entirely up to you if you wish to leave us now. Yes, thank you very much indeed. Safe journey back. Right, just one other thing before we come on to the employer's monthly submission update. Just want to check with you, Joe. I'm talking as slowly as I can. Now Matt's gone. Can you elaborate on what we were talking about earlier with Matt? Eunice, Matt? Is Matt going to be...
Oh, sorry, I was I was trying to think, what were we talking about after all the conversations we've had this morning? Yeah, I mean, if the committee are happy, Matt will be the regular representative to come and present the administration paper. He is kind of one of our key contacts now, rather than Eunice, overseeing the governance of the shared service. So he, as I say, this is his first one with us here. He has sat on the last ones, but if the committee are content with his presentation, then he will continue coming to present for us.
Mark?
Thank you, Chairman. Before we give you the answer, his title is Development and Governance, wasn't it?
Governance and Development Manager.
Oh, right, well, governance and development. Do you know what the development bit is?
It's looking at the development of the shared service. There's been one of my soapboxes over the past 6 years, getting on for 7 years, of the shared service has been to ensure that it works really well and we are seen as an equal partner with West Yorkshire. So he's bringing in some really good ideas about how actually it can feel less like we're an add-on to the West Yorkshire Pension Fund, and this is a full shared administration service where Lincolnshire, Hounslow and Barnet's voices are as important. So it's the development of the shared service and the governance.
Does it include, does development include, that's the reason I was asking, it's the pressures that are brought to bear in terms of doing the job. Does it include new clients as well?
I think that still mainly sits with Eunice in his AD role, but as I say, it is something that we regularly raise at the shared service meetings, and I think actually the service centre manager is quite in agreement with us there that they should not be looking for new business on the LGPS side until they're properly resourced. They're still working through some of the issues from taking Barnet on, because every time they take a client on, depending upon where it's come from, that can generate a lot of work. So yeah, Eunice would still be the front for that.
As long as you've got the opportunity to raise, both the issues in terms of getting our bit working properly, as well as the pressures that might come from new client increases. I've got no difficulties, Chairman.
Thank you, Mark. Thank you. Well, Joe, as head of pensions, has no problem with Matt continuing to join our committee now. So perhaps, although maybe it's not a formal vote, but if I can just have a show of hands that we're all comfortable with that for the future. Thank you very much. Joe, if you could tell Matt that we'll interrogate him the next time. Roger.
I think he's a breath of fresh air, Chairman. Compared with the other.
I couldn't possibly comment. No, Eunice did a great job, although it was refreshing that Matt never mentioned the awards.
Absolutely.
For those that weren't here, Eunice used to mention the amount of awards that West Yorkshire have won for every time. Anyway, that's by the by. Pass on to Eunice as well that we were very grateful for, as far as the committee is concerned, for all his service in the past, and no doubt we'll probably see him sometime in the future anyway, if not at conferences, etc. Right, moving on then to item 9, employer monthly submission update. Over to you, Claire.
Thank you. This is the standard quarterly update on late or incorrect employer submissions, and the report today covers the third quarter of 21-22. The fund closely monitors employer compliance with their statutory responsibilities to pay over their contributions for members on a timely basis. Contributions should be received by the 19th of the month following their payroll, and the fund classes an employer as late if either their cash or supporting data is received after this date. Details of the number of late payments and data submissions are set out in Table 1 on page 110. As you can see, there's generally good compliance from employers. The areas of poorest performance are around the submission of data, which is either from late data being submitted or from the submission of data not matching the cash which they've paid across. There are no specific concerns about employers that we want to bring to the committee's attention this quarter. Employers who miss the fund's deadline in 3 out of 6 months on a rolling basis will be fined unless they can offer extenuating circumstances. Table 2 sets out the number of fines issued during the quarter, and as you can see, there haven't been any. And I'm very happy to take any questions on the report.
Mark.
Thank you, Chairman. I read through the report, and it seemed to me it's annoying rather than anything significant. Do these come regularly to the committee, these reports? So it's really a question of continuing to do what we do and report to committee, I think, in terms of what the answers are, and particularly if there's any employer that starts appearing regularly and gets fined regularly because perhaps more sterner action is required. So good report, and I didn't have any problems with it. Thank you.
Well, as the recommendations state anyway, we are asked whether the committee wish to take any further actions against employers submitting late or inaccurate payments or data. So anyone else wish to comment on that or ask a question of Claire? So we're happy that the report is noted then. So can I have a show of hands, please? Thank you, Claire. Item 10, investment and responsible investment beliefs. Over to you, Joe.
Thank you, Chairman. So committee members attended a training session facilitated by our investment consultant from Hymans Robertson, David Morton, in February. And the objective of that session was to review the existing investment beliefs and responsible investment beliefs to see whether it was still fit for purpose or whether they needed amending to reflect the current views of this committee, given that we had a lot of new members. It was a very lively session. I think those that you attended will agree. A lot of discussion, a lot of debate, and we'd planned for 3 hours and could have gone on well past the 3.5 that we actually had. So David summarised the output, and that's all attached at Appendix A on page 121. The paper from Hymans also includes the suggested next steps and action points, how we'll actually evidence and show that we're taking those investment beliefs and RI beliefs seriously and what we're doing. This will also help us feed into the stewardship report that we have to do, that we will be doing every year. But I'm not intending to discuss those action steps and next points now. This is something that we'll bring to future meetings as we do the investment strategy review, etc., to make sure that we do reflect the beliefs in the investment decisions that we make. There were actually, after all that discussion, very few changes to the beliefs, rather more tweaks and wording changes just to update them to reflect the current environment. I think the biggest key change was taking out the standalone investment belief that was number 5, stating environmental, social and governance issues are important to the long-term success of the fund, and actually including that within the initial statement on investment beliefs, so that we're showing that it's an overarching principle and integrated into all the aspects of the fund's investment arrangements. So within the report, paragraph 4 and 5 set out the amended beliefs, and any changes identified I've put below that in italics so that it's easy to see the differences. Obviously the appendix paper shows a lot more detail. So the committee are asked now just to consider the updated beliefs to ensure that they do reflect the discussion from that training session and agree to the final version that will then be included within the investment strategy statement. Thank you. Take any questions.
Thank you, Joe. Before I bring in members, I just want to keep this as brief as possible because we did have a long debate, and pass on our thanks as well to David, who did an excellent job on that particular day. So, first of all, over to you, Sue. Sarah, sorry, I beg your pardon.
Thank you, Chairman. Just wondering, moving forward, how in step, out of step, trailblazing, ahead of the game are we compared to other pension committees? And is there anything that we can do to kind of learn what other authorities are doing and do some kind of benchmarking on this as we move forward?
To be honest, there's not really a lot of benchmarking that's done on things like beliefs. It's good practice to set out your investment beliefs. It's better practice to set out your responsible investment beliefs. I think the one area where we can now say we're ahead of the game of is in getting our stewardship code statement approved. The first funds, so that's something that Claire covered earlier, but that's open to, that's a standard for all asset owners, so pension funds, for asset managers and service providers. And it only started with the first submissions in April, which were reported in September, I think. The second submissions were in September, October, and were just reported last week. I think there are only about 199 names now on that signatory list, of which perhaps a third or so of those are pension funds. And I don't have the number of LGPS funds, but just as an example, within Border to Coast of the 11 partner funds, there's only 2 of us that actually have been approved as signatories. There are only 3 that submitted because it's quite a challenging thing because it's evidence-based. So we're absolutely not at the very top in what we do, but what we're trying to do is be transparent and improve and have those discussions with the committee and be able to evidence that we do take stewardship and responsible investment seriously, which was one of the key things about actually taking out that investment belief 5, which was just kind of another line, we believe in this, and actually it feeds through absolutely everything that we do. So whilst there weren't a lot of changes, I think that one change was really key in expressing how the Pensions Committee does believe that actually good environmental, social and governance considerations will improve and benefit our scheme beneficiaries at the end of the day in the pensions that they'll get.
Okay with that. Thank you, Joe. Mark?
Thank you, Chairman. I don't want to belate the matter. It was a very interesting training session, and I think the paper reflects exactly what you just said and what was key to the discussions, I think, at the training session. And I take it these will, be kept. Hopefully, there's a little bit of staticness now associated with the belief in terms of moving forward, but there's always the opportunity to revisit the situation. Thank you, Chairman. Very good report. Thank you.
Thank you, Mark. Yes. Right. I think, as it says in the recommendation, we have certainly Andy.
Thank you, Chairman. Two quick comments. I agree with Councillor Allen that it was a very, very good session. I thought we were going to make some reference to net zero in the beliefs, and that was my takeaway from the discussions at the training session. Even if it wasn't a definite commitment, it was a commitment to sort of start looking at the journey to think about it kind of commitment. And the other thing, just to sort of go back to the earlier discussions, I don't know when the war in Ukraine started, but did we ought to have something in sort of, I don't want to say anti-Russia, but considering the risks around more sort of, is it called geopolitical concerns that we may have as a committee? Thanks.
Yeah, I do think, Andy, that it does mention on M125 the position of the fund regarding net zero. So, but I'll bring Joe in.
Yeah, I think within the next steps and action points, we talk about net zero, and the plan was that we await until later in the year. Border to Coast, as Claire has mentioned, are working on their plan for getting to net zero. It's not something we can do in isolation on our own. So I understood that the acceptance was that just issuing a statement without actually any plan on how to do it, but it's something that we will revisit hopefully at the October training session, actually what we need to do. And I think the net zero is just one part of the whole being a responsible investor. So I think we were trying to widen it as much as possible, that all these things at different times will have varying impacts. So if you think at water scarcity might be something that in 5 years' time is the biggest issue. So it's slightly trying to future-proof them. Be very general, I think, is rather than trying to put specific things that we then might need to go back and reviewing. And on the geopolitical risks, I suppose my question would be that they've always been there. We've, Syria, Afghanistan, China, they've always been there. The current conflict feels much closer to home. But actually it is just another investment risk that all our managers look at, that it's equally important to look at geopolitical risk as it is to look at currency risks, as it is to look at underlying company risks. So it's whether we want to get into that specific level of detail or we want to keep them at a higher level whilst we understand what lies underneath them.
All right with that, Andy? Yep.
Yeah, thank you, Chair. I just think if I was an outsider, I appreciate everything Joe's said, and I looked at what this committee thought it believed, I would be expecting it to highlight those two real areas of concern. But I take Joe's point. Thank you.
Thank you, Andy. Mark?
Thank you, Chairman. I understand Andy's concerns. I don't, but I would like to support what Joe has just said. I don't think it's been ignored. To a certain extent, some of it has always been there, and I think there's an opportunity to continue to revisit these things. It's very difficult picking out one particular item that's just current and very near to us, as opposed to lots of other things that are happening across the world. And really, we need to take everything into account as much as possible. And it's there to a certain extent in the strategy and the statements that we've got. And it's a question then of making sure that appropriate reactions do take place, I think, within the brief and the statements that we've got, within the belief, I think, in the statements that we've got. So it's not I don't think it's a question of ignoring what Andy's concerned about. I think we've all got the same concerns.
Fair comment. Roger?
Chairman, and I know I don't normally speak, but I would have said that it was actually covered in ESG because environmental, social in particular, you know, you don't invest in companies where human rights, etc., and, you know, so I think it's actually covered in there, Andy.
Okay, thank you. Joe, do you want, Mike?
Yeah, sorry, the disinvestment is with the geopolitical is covered in the response in the beliefs, the update. I think rather than a detailed response, the overriding consideration is there. Sorry, it's in belief 2.
Okay, Joe, do you want to come back? No?
It covers the Geneva Convention. Thank you.
Okay, thank you for that, Mike. Well, I think, unless there's any other speakers, we have considered the report from Joe, but we've also we're also asked to agree the amendments to the investment and responsible investment beliefs. So could I have a show of hands that we agree to that, please? All those in favour, thank you. That's unanimous. That's passed. Thank you very much, Joe, for that report. If we can now move on to item 11, please, is to receive a report from Joe on the Lincolnshire Pension Fund Policies Review. Over to you, Joe.
Thank you, Chairman. So this is the annual review of the key policies of the fund, covering the investment strategy statement, the communications policy, the pensions administration strategy, governance compliance statement, breaches reporting policy, and the code of conduct and conflicts of interest policy. So where amendments have been made, and it's only across 3 policies this time, the policies have been attached as appendices, and updated areas are set out in the report. Though there have been very few updates required across these documents. So the investment strategy statement at Appendix A has been updated to reflect the cash benchmark change from LIBOR, the London Interbank Offered Rate, to SONIA, the Sterling Overnight Index Average. So this change has happened as LIBOR has been faded out of as a loan benchmark because of the role it played in worsening the 2008 financial crisis, as well as a number of scandals involving LIBOR manipulation amongst the rate-setting banks. So SONIA is being used now across the industry. It's more transparent as it's actually based on the actual transactions and reflects the average of the interest rates that banks pay to borrow sterling overnight from other financial institutions and other institutional investors. The ISS will also be updated with the investment and RI beliefs now that they've been approved by the committee, and with the new stewardship code statement now that that has also been approved by the FRC. The communication policy at Appendix B has some very minor updates, just reflecting the number of members and employers and some additional communication options that are now available. And the admin strategy at Appendix C, that's not been brought for a while. That sets out how the shared administration service will communicate and liaise with employers, what the responsibilities are of the administration service, of us as the administering authority, as well as the employers. And the policy is aligned to the shared service policy created in consultation with all shared service partners. And then there are just some additional elements relating specifically to the Lincolnshire fund in there, such as how we invoice for pension strain payments. The other policies haven't been amended, but I have put a link on there as to where they're published on the shared website, should any members wish to remind themselves of them. I do have an apology though, and this was brought out by one of our board members. I have repeated the narrative in the report on the conflicts of interest policy from the breaches report. So there was a bit of a cut and paste error there, so I do apologise for that. That would have just been a description of what the Code of Conduct report and Conflict of Interest report covered. The 2 policies that we've not reviewed here are the funding strategy statement, which, as you'll be aware, will be updated as a part of the triennial valuation process and brought back to the March committee next year, and the stewardship code statement, which was included within agenda item 7. So I will happily take any questions. Thank you.
Tom?
Thank you, Chairman. Are there any negative repercussions as a result of the governance non-compliance on the fund financially, or as a corporate entity in its own right? And what is, if any, what will the impact of increased inflation have on the assumptions on the amount of return that's made also in the report? Thank you.
There is no impact to the non-compliance areas. It's a comply or explain that we have to do, and we've reasoned why we don't comply with those governance. To be fair, that's not changed across a number of years, and there's still, for example, in having pensioner scheme members, for example, sit on the committee, there still doesn't appear to be a rationale to do that. So we don't have any issues with those areas of non-compliance. Increases inflation, I think that was covered by the training session that the actuary did for us. It's not the same impact that it at first appears. If inflation goes to 10% later this year, we're setting inflation assumptions across 20, 30, 40 years. So we had a meeting with the districts and council employers in the fund earlier this week, and there was discussion about inflation there, and there is probably a very minor uptick in those expectations. So that means that pension payments will be expected to increase slightly. The career average element of the pension will be building up slightly more. So there will be an impact, an increase in the liabilities. But because there's that long-term time horizon, it's not as worrying as it appears at first sight. Thank you.
Thank you, Joe. Any other questions? Right, Andy?
Thank you, Chairman. Just very quickly, Principle H in the governance, it says we don't have an independent observer. Does that role not be fulfilled by the pension board? Can we not sign that off as compliant? Thanks.
That's an officially appointed independent observer to the pensions committee, as opposed to, we have the pension board, which is really the oversight body, but the question within the governance compliance statement is slightly different. There are very few that actually have an independent person on, so it's not the same as our independent advisor, but kind of an independent observer to look at governance, etc. So it is something that we don't have. However, we obviously, the board do attend and are most welcome to attend our pensions committee.
Mark?
Thank you, Chairman. Communications. We have a very good communication strategy, I think, in terms of the information that's available and where it is and how people can access it. But does it actually work? Do we get an awful lot of people then, that keep themselves up to speed and up to date in terms of where they stand from a pension point of view? Or is it just a question of keeping their eye on their career average and then saying that's what I'm going to get, in due course?
In all honesty, I think it's not even as good as that. It's a really challenging thing. It's something that we're discussing as part of the resources team with Andrew and Michelle in here at LCC, and it's something about how can we get people to have a bit more interest in their pensions. It's an interesting one about the online, how many people that are looking online are actually looking at their statements, but the same question could be said of how many people, when it used to go through, land on your door, did people actually open it and read it or file it away? And having done many presentations over the years to scheme members, they don't read them. They're not interested generally until they get to a certain age. So it's any ideas as to how we can do it more? I mean, we try to make the website, the shared website. There's lots of videos and links and information there. We're also looking at developing, as I say, this is just within LCC on the intranet, as I say, and working with HR to try and encourage internally people to be more interested. We're also going to be looking at, on the LCC website, putting more direct information about the pension fund rather than just the link to West Yorkshire. So unfortunately, this isn't something that's specific to the Lincolnshire Fund. It's just general apathy, I think, about pensions across everyone. So, you know, I'm always on my soapbox shouting about it, but any ideas as to how we can get more information out there readily received?
Thank you for that. Joe, any others? No, well, the committee are asked to consider the report. I think we've done that and approve the following. 1, that the fund's investment strategy statement, ISS. 2, the fund's communication policy. And 3, the shared service administration strategy. Could we take them all as one? Can I have a show of hands that we approve that? Thank you. That is carried. Thank you, and thank you, Joe. Moving on then to item 12, which is back to Joe on the Lincolnshire Pension Fund Business Plan 2022-23. Joe.
Okay, thank you. This paper brings the annual business plan to the committee for approval and is attached at Appendix A. It sets out the objectives of the fund, some key statistics on funding level and cash flow based on valuations, the resources and budget, the key tasks for the year ahead, and a look back at the progression on those that we set in last year's plan, the key risks for the fund, and then a forward plan of meetings. So a lot of work has been done over the year, and generally progress on key tasks has been good, and where tasks haven't progressed, where we would have wished, it's due to factors unfortunately out of the control of the team. We've added 2 new tasks for 22-23, one being the future management of the alternatives investment portfolio, which will be brought to the June committee, and the second one being the triennial valuation, which is obviously a major point every 3 years for the pension fund. And updates and outcomes from both of these will be brought to the committee for consideration and approval as required. The forward plan is very flexible though, and additional papers or training will be added as required throughout the year. So I wasn't planning on saying any more, but I will happily take any questions. Thank you.
Any questions from members? None forthcoming. So we're basically asked that the pension committee note the report and approve the Lincolnshire Pension Fund business plan for 2022-23. All those in favour, please show. That is carried. Thank you very much. So let's move on to item 13 then, which is the annual report and accounts 2021-22, review of accounting arrangements and accounting policies, and the external audit strategy memorandum. Over to you, Claire.
Thank you, and I apologise for possibly the longest committee report title that we've seen. The report today covers a number of items relating to the preparation of the annual report and accounts, and includes information on the Code of Practice, which is the guidance used to prepare the accounts, and the accounts and audit regulations, which set out dates for publication and audit of the document. The accounting policies which the fund will use to prepare the financial statements, and then a copy of the external auditor's audit strategy memorandum, which sets out the work that they will complete in giving their opinion on the accounts and annual report. This year we're lucky that there haven't been any changes to the Code of Practice which will have an effect on the preparation of the pension fund financial statements, and the document that you will see at committee in July will be very similar to last year. There are a number of proposed changes to the accounts and audit regulations which are there to address ongoing concerns regarding the local audit market. These will be picked up in detail at the audit committee later in the month, but the one thing that this committee will see is that the date for publishing audit, pension fund accounts and annual report has been extended to the end of November for the 21-22 accounts. The pension fund will continue to prepare its annual report and accounts for the end of June, and the majority of audit work is planned to be completed in July, with work on unquoted assets being completed at the end of the summer, well in advance of that November deadline. The committee today is asked to approve the accounting policies which will be used to prepare the accounts. There are no changes to the code guidance, therefore there are no changes to the proposed accounting policies, and these are attached to Appendix A for your information. Appendix B to the report is the external auditor's audit strategy memorandum. This summarises their audit approach and the significant risks they have identified for the pension fund accounts. The 2 risks highlighted here are management override of controls and the valuation of unquoted investments. These are both standard risks for pension fund audit and will be addressed during their work. and I'm very happy to take any questions.
Any questions, members? Yes, Steve?
There was a proposal around valuations to relax some of the requirements around those. Is that going ahead, and if so, is it beneficial or is it not because of the timescales?
The consultation on that has closed. I'm not aware that anything has come out on that. However, in terms of the pension fund accounts, it has no impact on those. It's relating to property, plant and equipment. So will have an impact on the county's accounts, not on ours. And again, there are proposed deferral to leasing standards, which again, there aren't any in the pension fund accounts, so doesn't have an impact on us directly.
If I could just come back, but I understand that was one of the delays in getting the county council's accounts approved, which obviously delayed the overall account approval. So if that does come in, hopefully that will help with the timescales.
Yeah, that is very true. We have our own, in terms of those level 3 in the fair value hierarchy, so there's unquoted assets. We have a time pressure on those, that some of those don't arrive with us until the beginning of September, was the latter ones last year. So we have our own time constraints, which the November is helpful for. The partner who gives the opinion on the pension fund accounts requires all, or has over the last 2 years required all of those statements to be with us before they will sign our opinion.
Okay, any other questions? Any points? No. Thank you, Claire. If we can bring you back to the recommendations on page 187, there are 4 points or things that we need to approve. So I'll read them out and we'll take them all as one, unless anybody dissents on that. That the committee note the changes required to the Statement of Accounts from the Code of Practice 21-22, note the changes to the Accounts and Audit Regulations 2015, approve the Statement of Accounting Policies, Appendix A, for use in preparing the Local Government Pension Scheme, LGPS, Pension Fund accounts for the financial year ending 31st of March 2022, and note the External Auditor's Audit Strategy Memorandum at Appendix B. Could I have a show of hands, please, that we approve those? Thank you very much. That is carried. Right, so now we're moving to item 14, and this is a consideration of exempt information in accordance with section 100A(4) of the Local Government Act 1972. Agenda item 15 and 16 has not been circulated to the press and public on the grounds it is they are considered to contain exempt information as defined in paragraph 3 of Schedule 12A of the Local Government Act 1972 as amended. The press and public may be excluded from the meeting for the consideration of items 15 and 16 of the business.